There's an encore there, guys. We hit the button the second time because it's a big day for all of us here. It's a big day for all of you there. I think it's a big day across the entire United States. So with that, welcome back to Higher Exchanges. I'm your host, Jesse Redmond, Head of Investor Relations and Business Development at Leaf Brands. I am here once again with my good friend and the smartest cannabis investor I know. He is Morgan Paxhia. Morgan, what's going on, man?
History, baby.
Whew.
We made history today. We lived it. We're part of it. The future's great. This is such a big day. I can't even believe it. I know we'll get more into it, but I'm trying to think back over to the years of Poseidon, and this has to be one of the single biggest moments in the history of Poseidon. So excited to be here that we're doing this show again before year end.
Yeah, so much to say, Morgan. But before we do that, let's get to our two guests. First, we have our policy expert and one of the nicest, classiest, most informed people I know. He is the gentleman, Hirsh Jain, the founder of Ananda Strategy. Hirsh, how are you today?
I'm doing great. It's a historic day, like Morgan said, and I'm excited to break it down with you guys.
And we have our capital markets expert. He is a former hedge fund portfolio manager and now VP of corporate development at Turning Point Brands. His name is Scott Grossman. Scott, how are you today?
Hey, guys. Thanks for having me on. What a historic day, still kind of digesting it all. I'm sure we'll break it down, but really, really special event.
Yeah, a special day. And if you're one of our live listeners, which I think there'll be a bunch of today, and you're looking at MSOS, which I'm not going to look at during the show, but it was down. Not feeling that at all. We were talking backstage. All of us are pumped at what these changes mean. And if there's a short-term sell the news event, if you're a trader, you know, that's an issue for you, but for the industry at large, I think that's a complete misread, and we're going to jump more into it. But let's set the table by talking about what happened. So today, President Trump signed an executive order directing the DOJ, to begin rescheduling cannabis to Schedule 3. This does not federally legalize cannabis and is not immediate. It restarts the formal DEA HHS rulemaking process. If finalized, rescheduling would eliminate the 280E tax burden and open the door for expanded clinical research and FDA-reviewed cannabis medicines. This one's big to me, guys, and I think is, big for some operators, and it's just big for the wellness of people, which honestly means the most to me of anything. And that is the CMS is expected to develop a pilot to allow some Medicare patients access to cannabinoid-derived therapies, potentially including CBD, beginning as early as 2026. That's just months away. And the White House signaled intent to work closely with Congress on CBD clarity, including possible dietary supplement treatment. Broadly speaking, I think you said it well, Morgan, in the agenda. You put this as the biggest thing that's happened in the cannabis industry since Colorado went legal. And I think that's a fair thing to say, guys. This is absolutely huge. It gives us clarity. It removes that 280E tax burden. And excited to talk to Hirsh about the potential and what this means for further reform. But before we jump into the specifics, let's just go around the horn and get your reaction to that news. Let's start with the co-host, Morgan Paxhia.
Well, yes. I mean, certainly this is going to be a day I will remember. This is for you listening in podcast form. This is December 18th. We're doing the show at 12 p.m. Pacific. So this is after the White House. President Trump came out with these announcements that Jesse just went through. And yeah, I mean, there's so much to digest here, but just the federal recognition that this is not the worst substance on the planet. And I think one thing that, really stands out to me is, because I've gotten a lot of questions about this, is how is this different from Biden when he requested the HHS begin a review? This is very different to me. This is a call to action to get it done. This is not saying maybe it'll be scheduled 2, maybe it'll be scheduled 3. This is very specific. And there's a specific timeline associated with it, because to your point of what they want to do around CBD and Medicare, they want that program to be active by April of 2026. So we have to get this done before then. So this to me is a very measurable timeline. This is action. This is what we want to see. This is what this administration promised to us was action. And, RFK did say this on the, in the briefing, or whatever you want to call it, was, there's been 5 administrations that have promised change, and not one has followed through with change. And this president promised change, and he's delivering on it. And so this is, This is great for the American people. This is great for our industry. There's still plenty more to unpack, but I'm just, this is fantastic. I can't share it enough of how excited this is for, for all of us that have been through this, for the survivors in this industry, for the patients, for the customers. This to me is like a complete reset of legal cannabis. This is like day one, right? We have so much installed knowledge at this point and experience. So what we can translate this to from a commercial application, from an investment perspective, I just think there's so much opportunity ahead.
Hirsh, what are your thoughts?
Yeah, I mean, first and foremost, just to echo what Morgan was saying, this is a watershed moment, right? This is the biggest change to federal cannabis policy since, the Controlled Substances Act was passed more than a half century ago. And, this is deeply intertwined with American history. As many of us know, right, Richard Nixon appointed a nonpartisan commission, the Schaefer Commission, to study marijuana. They came back with the conclusion that marijuana was relatively benign, but Nixon totally rejected their conclusions and decided to place marijuana, or cannabis as a Schedule I drug, because he used it, as a way to demonize his political opponents when things in, Vietnam weren't going very well. And so he used drug policy as a political tool, right, rather than orienting it around public health. And I feel like we've been kind of living in that, Nixonian epistemological prison for the past half century, where despite all evidence, we've rejected the claims that cannabis has medical efficacy. So I think it's huge for that kind of historical reason. And again, this is bigger than cannabis. We're intertwined with the currents of American history here. I'd also say second, this is the biggest shift, since Prohibition, but it's not the final destination. I think many of us agree that the final destination is descheduling. And there's been a lot of debates about whether Schedule III will create complacency. I don't think we have room for that debate on this podcast, but I'll just say I have a differing view that I think this precipitates, further change in the years to come. And that's what makes it so exciting. And, just a couple more things I'll say. As someone who's from the San Francisco Bay Area, this is evidence that small democratic experiments can change the world, right? It was a bunch of ragtag activists in the early 90s, AIDS activists, the most marginalized members of American society, that got Measure P passed in 1991 in San Francisco, making cannabis the lowest law enforcement priority. Then 5 years later, you get Prop 215 in California. A decade after that, you have a dozen states with medical cannabis. A few years after that, you have adult use programs. And so it's no exaggeration to say that San Francisco and California, which are often so maligned, reshape the country, and I think will reshape the world on this issue. And, the final thing is, I'm sure we'll get into Schedule III and what its implications are. The way that I think about it is we can talk about its immediate impacts, but then we should also talk about how does it impact the behavior of domestic political actors at the local, state, and federal level? How does it impact the behavior of all of these big economic institutions, whether they be banks or insurance companies or stock exchanges or the healthcare system? And then perhaps most broadly, how does it impact the world? Because the United States has set the agenda on drug policy. So there's so much to unpack here. And I think those are some of the framings we'll talk about today.
Yeah, I love that San Francisco angle, Hirsh. I'm just finishing the book, How to Change Your Mind by Michael Pollan, and it kind of resonates with that about all the, all the psychedelic trials over the years and the fits and the starts. And they're still really in many ways trying to get things across the finish line. We're far from across the finish line, but excited to have the momentum. It also just reminds you, hearing a little bit of background noise. Do you guys hear that?
Yeah, I do.
Okay. Why don't I throw it over to you, Scott?
Sure. I mean, just to kind of build on what Hirsh and Morgan just mentioned, I think my first reaction is kind of redemption and legitimacy, not just for the folks on the front lines like all of us are, but for the tens of millions who, don't have to look over their shoulder. I think it's about righting wrongs, restoring freedom and choice, and creating real opportunity and wellness. I can't speak for both of you or all of you, but it's been a really long haul. Some longer than others. Morgan, I'm looking at you, but I can say with a lot of confidence that if you've been in the space professionally for 5 or 10 years, this is a very long battle and a 90-year war. And, to Hirsch's point, this plant's been Schedule I for 55 years. And the prohibition, we're almost up to a century. And over that time period, we've seen, we didn't talk about, or President Trump didn't talk about clemency, but we've seen 20 million people arrested for weed. We've spent over $1 trillion fighting this war. And so going back to that theme of redemption and legitimacy, I think we're clearly on the path of taking, of flipping the page and moving forward. I think the theme, at least kind of big picture, if I kind of had to think about this year in entirety, not only in our sector, but just abroad, the world is going through a massive amount of change right now. And we're just being bombarded by inputs that we just weren't designed to really digest. And we just got off the call, was it less than an hour, 2 hours ago? And so I think maybe it's a recommendation for all of you. I think we just have to sit with it a little bit and stay present. But I'm trying my damnedest not to really let this moment go, and just appreciate how far we had to come to get to this moment in time, which, again, to Hirsh's point, I think is the start, certainly not the end, but it was a critical start.
Well, I think that's great perspective, guys. Still echoing. Why don't I throw it over to you, Morgan?
Yeah, sorry, Jesse, because I want to hear from you too, and I guess I'm hearing an echo, but I'm doing my headphones, so I think I'm doing everything I'm supposed to do. But I think we're just breaking the internet with this breaking news. But
it's always me.
Yeah. But Scott and Hirsh, your volume and mic seem good. So why don't we start with you guys, and maybe we'll start on the policy side. Hirsh, why don't we dig a bit deeper into what you're talking about, the start, but what S3 means, the implications. Let's start with that.
Sure. I mean, I'll start with a couple of the obvious things, right? I think the most obvious one is 280E, right? And I think there's still an open question, for me at least, about when the 280E repeal applies. Does it apply in 2025, or is the rule finalized in 2026? I think there's still some optimism that it might apply in 2025. So I think that's one open question. But to state the obvious, the elimination of 280E would be a boon to all of these different operators. I think a subsidiary question of that is, where do those 280E savings go, right? I think people have made the point before that, the elimination of 280E might, a lot of that might get passed on to the consumer, which I think is fair. Not all of that will flow to the Now I'm getting a little bit of an echo, I think. I think it's fine. So there's 280E, right? I also think, the elimination of 280E actually might help with employee retention. Like, it's pretty hard to be an employee in the cannabis industry given 280E. A lot of people work in the space because they're passionate about cannabis, but quite frankly could be making more money or treated better if they worked in other industries. So I guess that's a way of saying the elimination of 280E is welcome. I don't think we should assume that it should flow entirely to the bottom line. Part of it might get passed on to customers in the form of lower prices, which is a good thing for addressing the illicit market. And part of it might lead to, employees being treated a little bit better. So that's one of the implications. I think the other, sort of immediate implication was the sort of CBD component of the executive order. And, as many of us know, what they announced is that there will be, some model whereby seniors can get reimbursed for full spectrum and non-intoxicating CBD. And I think what's exciting about that is, it's one thing to say that cannabis has medical utility. It's quite another thing to integrate, cannabinoid products into, our health insurance system, particularly part of it that's administered by the government. And so I see this as a beginning of a larger process whereby cannabinoid medicine is accepted in our healthcare system. And if you think about things historically, when the US makes social changes like this, sometimes they start out incrementally and then they spread to other segments of society, right? If you think about Social Security, Social Security started as a very limited program and expanded over time, right? Initially, it only covered retirees, right? And then it spread to widows and orphans. And eventually, like all American workers and their families were covered by Social Security. And I think you could see something similar happening, right, in the context of cannabinoid products being integrated into our healthcare system. And I think that's important, not only because I think all of us on this call believe those products have medical utility, But if you think about it more broadly, like our healthcare system is a mess in this country, right? Like every year, health insurance, rates go up at like 3 or 4 times what wages do. We as a country spend almost 20% of our GDP on healthcare, to the point that it's causing like really big social problems. So I'm not trying to suggest that cannabinoid products are going to solve all of our healthcare issues, but this is a very practical way we can start to take steps that would be beneficial in that regard. So those are a couple of immediate implications. I'm sure there's other things we could talk about at the state level and the federal level, but maybe I'll just kind of pause there for a second.
Can you guys hear me okay? Because I just switched headsets.
Yeah,
Yeah,
you
you're
sound
good,
great.
Scott.
Okay, great.
And we have no echo. Great.
Looks like that took the echo off, Morgan, so we should be good to go. Knock on glass.
So yeah,
So there's a couple follow-ups, but one thing I thought would be interesting to your point, Hirsh, is maybe Scott, you can weigh in on this, is the point about removing the 280E going forward, which will go into effect in 2026, is to your point about there's real dollars that could mean, there's some room that if prices come down more, but regardless, take one of the larger companies in the space, Scott, what kind of dollars are they paying in 280E? And what can that mean that gives them more room, to Hirsch's point about whether it is pass through and lower prices or more for employees? What are the actual dollars behind that though? Because they are significant.
Yeah, they're massive. Ben Culver on GTI was on Fox. He reiterated, actually he didn't reiterate, he threw out a 60 million number for GTI, as you know, is a top 3 tier 1. But as you go down the path, every company is saving tens of millions of dollars, particularly the large tier 1s. And I think I'll get to the implications of that. But I think what we've seen is, a lot of these companies shut off effectively paying the government. Some were earlier, some have yet to pay, cutting it off completely. GTI comes to mind. But this is a complete shot in the arm. A number of these companies will flip to GAAP positive or net income positive. A number of these companies that are actually producing cash flow will now have more capital to invest in themselves, to potentially make investments or acquisitions. And I think for the challenge companies, as you remember, we've talked about this numerous times, there was this enormous amount of backlog where the bid ask was so wide because the range of outcomes were just so variable that it was just really tough to strike deals, combined with the fact that we don't have real bankruptcy policy, just given the federal nature or the status of this industry. And so on the 280E, clearly a boost in the arm in terms of cash flow dynamics. I think the theme here is I think it will grease, not cure, but I think it will grease the capital markets, and we can go into that. In terms of what they'll do with the actual tax savings, I think that's an ongoing debate. I think there are very smart people who think that this 280E is just effectively going to lower prices. I actually sit on a variant side of that. I think retail prices will continue to normalize, particularly in newly launched states. Ohio comes to mind, Connecticut comes to mind. But I don't necessarily think it's going to be a windfall for the consumer. I think where the debate lies is who's going to get all those proceeds. Is it going to be the cultivation side? Is it going to be the distribution side? Is it going to be the wholesale side or the retail side? I think everyone will contribute to that, but I do not think that prices will magically come down by virtue of 280E and prices.
Yeah, interesting. I'm more in the camp that prices will come down, but I don't think that's a bad thing, because I believe demand will more than overcome that, because we're just going to be able to capture more of the price discrepancy versus the illicit market. So if you are able to neutralize that, the demand side goes up so much more than price, and that is still a very beneficial thing. I don't think it's necessarily going to go all the way down immediately, but I just, that kind of price normalization gives them a hell of a lot more room to work when they're not having to deal with this 280E. But
yeah, my view on that is it's going to be very operator and state dependent.
Mm-hmm.
But I don't think CEOs, at least the ones that I talk to, are sitting around the table and, just using GTI as an example, or whoever, if it's $60 million of benefit. I don't think they're rushing to figure out how to pass that along to the consumer. If we remember, I always talk about demand leads policy, and I spend a lot of time in tobacco. Obviously, I spend a lot of time in alcohol and CPG. We didn't have a price issue vis-a-vis these substitutes, which cannabis undoubtedly is stealing share from. Look at and I think it's a symptom of how we actually sell our product. We sell it on a typically a dry weight basis, and it's not a per serving. Beverages clearly changed that a little bit, but in my view, cannabis wasn't necessarily hamstrung from the end price elasticity relative to other substitutes. And so, like I said before, I do think some of that will end up coming into the end consumer, but I don't think it's going to be a complete pass-through. And I think that will be very beneficial to the overall health of the industry.
Yeah. And I agree with everything Scott said. I think it's worth noting, a skeptic might note that, a lot of these companies were not paying their 280E taxes to begin with, right? So this won't really change their financial profile much going forward. A skeptic, might note that the UTPs on some of these operators are insane, right? Are now north of like $500 million. And I think the interesting thing going forward will be, to what extent can these operators, negotiate some of those UTPs down over time? I don't think anyone has an answer to that question, but I think that's one very obvious thing to be paying attention to going forward.
100%.
Yeah, there's got to be a solve because it's not going to go away, and it is a gating issue, I think, for more capital for some of these companies, because you're sitting behind a massive government in first position, and then the secured debt in another position. By the time you're, being an equity participant, I think this does open the opportunity, though, for a lot of cleanup of these companies to address these previous issues. And certainly those that have modest to none, like GTI, this is just a lot of growth opportunity for them because they don't have to deal with this cleanup stuff. They're just in go forward mode. And, but I do think there's room to, there are opportunity for them to get this stuff cleaned up and sorted out, and work with the government to figure out what that is. Is it a repayment plan? Is it are they going to be able to equitize, or like, what are they going to be able to do, to get their balance sheets back in order? But we just have not had opportunity for them to do balance sheet work for years. It's all just been leverage, right? It's just been debt, and tax debt has been the source of capital for years now. So Jesse, we missed you at the top, though, because of the echo. So you didn't get to weigh in on your initial thoughts.
Yeah, man. So my initial thoughts were, I just keep taking sighs of relief. Like I felt that way in, was it 22 when Biden initiated the rescheduling review? That's insane. I can't believe it's somewhat been almost, 3.5, coming up on 4 years. So Morgan, I just feel a sense of relief, and I feel an opportunity to move forward. Like I feel like for so long, Morgan, you and I have had the conversation online and offline about the industry feels stuck. And I don't mean we feel stuck at the operator level, because whether it's Scott, whether it's Poseidon, whether it's what we're doing at Leaf, like we're all working harder than ever, and just talking about Leaf, we moved into New York, we started the farm in California, we did the deal with Glass House. Like if we've had a huge year in terms of things we've done at the operator level, but it's felt stuck at the capital markets level, and it's been hard to put the energy in the stocks. And guys, I think most people know this, but let me emphasize this: there has been so little capital out there available for growth. If you're a tier one, if you're GTI, there's money out there. We've seen some other big ones do some refinancings, but if you're looking for $5-10 million to light up a new state, unless you have huge EBITDA and cash flows, that money just hasn't been there, and that's put a cap on growth in the industry. So I'd say sigh of relief, excited, and think we will get growth coming back in through CapEx. Hirsh, we can talk about new states. There's this hemp conversion, which is a different topic. And then I'd say, oh man, I'm also excited about the CBD thing. I think I mentioned that before. And again, in terms of, my life, we have this 100-acre hemp permit. We have one of the most sophisticated extraction labs in the country. So I think there's going to be some opportunities for, a select group of the SSOs, MSOs, limited other public cannabis companies to jump in and participate potentially on that CBD side. So there's an economic angle there that I like selfishly. And again, I just think it's great for people just to move this forward, reduce the stigma. How many texts have you guys gotten from people like, a brother-in-law, your aunt or somebody sending you this news saying, what does this mean? What does this mean? And at least it's putting cannabis in front of them. And I didn't love everything Trump said, but I think it's a positive framing about how cannabis can help people. And to me, man, this is all a huge step forward. Guap, thanks for all your help in the comments there with the audio issues. But El Guapo, was saying, I think MSOS is down 21%. And I just feel completely unfazed because I think this is a huge moment and, a big opportunity for us to move forward.
Totally. And Jesse, you were remarking on how long it's been, right, since this process was initiated. It was like October of 2022, which is a lifetime ago. I think back then there were only about 12 adult use states. Now there's almost double the number of them. And there's no minimizing the damage that has been caused by those delays. Like obviously the balance sheets of so many of these operators have been decimated by how long that this process took. And there's probably a lot of companies that had the potential to be really good companies that might still not make it because of that period of time. So that is true. And I hope this doesn't sound like too much of a cope, but I think there is some political upside in the fact that this process spilled over to the next administration, right? Because that both administrations have had their fingerprints on this process. And we live in a country that is so highly polarized that any major social change in this country is constantly relitigated, whether it's Obamacare or even like the Bush tax cuts, which were 20 years ago. So I recognize that this is a little bit of a cope, right? But now both parties have their fingerprints on it. And you have seen some people that never said anything positive about Trump recently say that it's positive. So I think that's really good. And when I think about some of the Republican opposition in the letters that has surfaced this week, right, to this move by Trump, I know those got a lot of attention, but I think to myself, what would that have looked like if Kamala Harris, right, or Joe Biden were the one to push this over the finish line, right? So of the 53 members of the U.S. Senate, 22 registered their opposition. Of the 220 House Republicans, 26 registered their opposition. Those numbers would have been closer to 80 or 90%, right, if Biden or Kamala had moved this over the finish line. And so obviously there's been immense damage by the delays, but if we're trying to build an enduring new consensus around cannabis as medicine, I really think however painful this process was, this in a weird way kind of set us on the course to do so. So I think that's just one angle to consider about how this plays out going forward.
So Hirsh, I've had a theory with this potential rescheduling, which is now happening, was that once Trump put his stamp on this, a lot of Republicans will fall in line. And meaning, at the state level, states that have not enacted state legal policies, even against the will of their people, just because of their own political views or whatever, my view is that this opens the door for more states to legalize that have not. What do you think about that from your experience?
I think that's true. I would say that's generally true. I'll add a caveat or two, but I agree with that, right? I think that it opens the door for more states to legalize. I also think this means that states that have legalized can enact more rational policies, right? So to the extent that cannabis is recognized as a medicine, a regulatory structure that insists that it's a vice is less tenable going forward. But in short, I agree with you. And I think probably the state that we're all thinking of most prominently is Pennsylvania. And Pennsylvania is a state where the Senate is controlled by Republicans. And so you need, Republican votes in order to get it over the finish line. And so, like you said, Morgan, right, there have been plenty of people in Pennsylvania that have said that, I can't vote for this while this is a Schedule I drug, right? And so we've received many, comments from legislators to that effect, that this opens the door. I guess the one caveat I would offer, right, for anyone who thinks that, legalization in Pennsylvania is automatic next year is in a lot of these states, there are weird political mechanics that might not make it so. So just as an example, in Pennsylvania, there's a Republican Senate controlled by a senator named Joe Pittman. He seems to be insisting that he needs a majority of his caucus, right, to be pro-cannabis in order for him to bring a bill to the floor, right? So right now, Pennsylvania has a 27-23 split, right, led by the Republicans. And so you would need 3 or 4 votes, right, to get a majority in the Senate. So it's one thing to get 4 out of 27 Pennsylvania Senate Republicans to be pro-legalization. It's quite another, right, to get 14 out of those 27 to be pro-legalization. So I bring that up not to be a Debbie Downer, but just to say that, like, yes, although I think this unlocks inertia, there's still a lot of work that we have to do in these states. And then I think, this is true both for Pennsylvania adult use, but also the remaining states, like, that have not passed medical programs. We have 40 medical programs, 10 states that lack medical programs. In each of those 10 states, there's significant Republican control. And so I think that can help unlock that change going forward. And, kind of in addition to what you're talking about, Morgan, which is like, how does this prompt reform to get to legalization? I also think at the state level, when it comes to tax policy, or when it comes to like what we face in California with these local opt-outs, like all of those policies are predicated on the assumption that cannabis is a vice. We're going to tax this to death, right? Because it's a vice. We're going to empower local jurisdictions to keep these businesses out of their community because it's a vice. But when you create a new consensus that it's a medicine, that's just no longer just conceptually justified, right? How do you justify taxing a medicine at 10x the rate of alcohol and tobacco, right? How do you justify preventing people from accessing medicine conveniently in their own cities? And so I think, the work for all of us now is like, this is a broad social movement. The work for the thousands of us involved, right, is to take this new consensus and engage in advocacy in our own little corners of the country to push for better policy, more rational policy. And that's, I guess the point is, that's not going to happen automatically. It will take effort by us.
I'll give a hell yeah to that. I mean, great call about California, because we have so much opportunity in California that is untapped because of the opt-outs. And so if that does give more room, I mean, to your point of just even states that have programs, how much more growth is within their states. It's funny you mentioned Pennsylvania too, going next year. I thought about Florida and, how it flies so, clear in the face of the outgoing DeSantis of like, we can't have this. And it's like, just deminimizes that argument so much. And hopefully, but I agree, like the state work there's still plenty left to do, but I think this really does help the argument in a strong manner.
Totally.
Hirsh, I have a follow-up for you. And Morgan, get ready to plug your ears, because I want to ask Hirsh what he thinks about the probabilities and the exclusion of safe banking.
Yeah, I mean, look, it's like, what year is it? We're talking about safe banking. So obviously, many of us were a little disappointed that there was no kind of like safer language included in the executive order. Like that would have been awesome. Like, I'm hearing some rumblings that it could be mentioned in like early 2026. So we'll have to wait and see what happens. I think, we should reiterate that it's safe banking is still incredibly important, even if we're sick of talking about it. Like, as recently as yesterday, Catherine Cortez Masto, like the Nevada senator, was outlining why banking is still a big challenge for the industry. And I know it's an open question whether something like credit cards might be included, right, in a banking bill. But if we could get something like that included, and obviously so many people have said this before, that would substantially increase transaction size, and that would also reduce the amount of money that all of these operators have to spend on managing their cash. And maybe in a best case scenario, it might precipitate uplisting. So I guess those are all the reasons why safe banking is important. As to what might happen going forward, I'm just going to state the obvious. I think the votes are probably likely there, even in a Republican-controlled Congress, right? The real question is the people who have the ability to bring that legislation to the floor, right? Like, will a nudge by Trump be enough to get them to do so, right? So if we think about who those two people are, it's Mike Johnson and John Thune from South Dakota. John Thune is on the record as to not liking cannabis. Mike Johnson was in the news most recently because he was in that Oval Office meeting with Trump when they were on the phone with different operators trying to dissuade him from moving forward with rescheduling. So I think the obvious thing to point out is that the people in Congress who have the ability to bring this bill to the floor or not, right, are traditionally hostile to cannabis. And I think, the real question is, how much does Trump lean on them, right, to bring a bill to the floor? So I know that's not a super specific answer, but I think it's that, sort of reframing this as medicine probably makes them more amenable to bringing this to the floor, but it probably will require like some effort by Trump in order to do so, because otherwise these aren't natural friends of cannabis. And I would just note, the window there is short, right? In other words, if Trump really wants safe banking to be part of his legacy, he knows that he probably, will suffer some losses in 2026, right? And so if he wants another win going into the midterms and he wants this to be part of his legacy, he's going to have to put pressure on these folks relatively quickly. And I guess I'll conclude by saying, if we don't see him talk about this, right, in Q1 of next year, right, then I think the prospects for it getting done next year are significantly diminished.
Anything else for Hirsh, Morgan, before we transition into the capital market side? And Hirsh, of course, you're welcome to chime in there, but just looking for a bit of a segue here if you think we're done combing through the policy section. But if you have more, that's totally cool too.
Just one last one with your timeline and everything. I think you're with all of that in mind, but just correct me if I'm wrong, but it seems like your timeline is associated with the fact that next year's midterms. And so to your point, you think that it's actually, he could lose votes going into midterms with banking reform?
No, mostly that presidents tend to lose, like after a president is inaugurated, the midterm elections just tend to be tough for them, right? Thinking here about how, when Barack Obama was, elected in 2008 by wide margins, he got his butt kicked, right, in 2010, right? When Trump, won his first term, he suffered a lot of losses in the 2018 midterms. So basically the point being, if he wants to get this done, he has another 11 months, 12 months where he controls the levers of power. And so he's going to have to prioritize it, because if he loses one or both houses of Congress, like, they may not want to pass the bill that he wants to pass or to give him a win. So there has to be some urgency on his part if he wants to get it done.
Got it.
And we had a question, Hirsh, in the comments where somebody was asking about, this is in order to, I'll let you say it because I'm not going to say it well, in order to move forward, instructing the DOJ to finish the rescheduling process. What do you think the timeline is for that? When would you expect a final rule, Hirsh?
Sure. I'll give my take, but the caveat is I always, of course, defer to people like Shane Pennington, right, on these kind of like legal mechanics. But in short, the president doesn't have the power to reschedule cannabis with an executive order, but he does have the legal authority to direct his administrative agencies to issue that sort of notice and final rule. And his agencies are generally pretty acquiescent to them. So with the caveat that I'm sure there are other people who know this process slightly better, I think it would be several months, right, before this is finalized. And we all know that this issue, this has to be published, right, as a final rule. And then there's kind of like a 30-day interim period before it takes effect. So I think the most logical timeline would be sometime in Q1 or Q2 of next year, which raises interesting questions about when the 280E repeal would be effective. But that's kind of my rough estimate on time.
Great. Well, let's transition into talking about capital markets and keep it kind of a group format, but I'll start with you, Scott. And I shared on X earlier that there's one conversation, literally since 2020 on a daily basis, for one reason or another, I've been talking to cannabis investors, first as a consultant running portfolios for family offices, next working at Water Tower Research, now working at Leaf. The common thread is consistently talking to people about investing in cannabis. And I think I've done a good job explaining the benefits. I think my timing's been massively wrong. But in terms of the benefits, I think it's been relatively easy to overcome some of the objections. But there's one, Scott, that stuck in my mind. And that was a conversation last year. I think it was in July of last year with a small cap growth fund manager. And this was coming up on the Florida vote. And this was when S3 had momentum. And he said, Jesse, we're excited to enter the space, but we need two things. We need growth and we need clarity on regulations. And he went on to say, how can I play the game if I don't know the rules? And that really stuck with me because for a long time, Scott, I think we've been making a bet on what the rules were going to be. And that's gotten a lot of people into trouble because it's taken so long to get here. But I'm curious your perspective now with a framework in place. How does this change the investability of cannabis? And do you think we start to see more institutions and importantly, more banks, more lenders come to the space?
Yeah, it's probably the $1 billion question that everyone's trying to figure out. I've been pretty vocal, with respect to what we are seeing constantly is a tiny sliver. If we just take the equity side for a second, we're seeing a tiny sliver of the capital stack trading in a hole the size of a thimble, right? Both in and out. The MSOS ETF is, effectively 80 to 90% of capital flows. That's really the only way for institutions to get involved. And to your point, the rules are murky. And so combined with the lack of custodial and the lack of FinCEN regulation, it's become, historically, it's been largely a retail only, high net worth, family office kind of asset class. I think this does change, although I don't necessarily see anything, and again, I'm still digesting, I don't see anything in here that will dramatically change, at least in the short term, FinCEN regulations, right? We can debate for a little bit as to whether this is enough for the exchanges to allow for uplisting. There's clearly some discrepancies on the aiding and abetting. There are some companies on the NASDAQ that are tangentially involved in the cannabis industry, but IIPR is a great example, right? And so my view is this is a step forward, but certainly not the panacea. We were talking offline. What I would say is what I do for my day job combined with what I do in my life, the activity has unquestionably skyrocketed. I think there's a lot of smart people who had been doing work. Maybe it was that time period that you just mentioned, Jesse, and put it down. I think there's a lot more people that are smarter on these companies. And my suspicion is, like I always say, it's going to start in the credit markets. Credit is always going to lead equity. And my hunch is that we need to get through some of those larger issues on the credit side before we see meaningful changes on the equity side.
Yeah, the conversation that I've been having is the longer this has dragged on and the longer it's taken to get reform, the less people are starting research in advance because of all the false starts, right? Like if you got excited in 22 and did a bunch of research expecting reform, I know a big Midwestern endowment that did that and dipped their toe into a handful of MSOs, and they were early and they got burnt. And I'm not sure ultimately what happened with that, but there were some doing the work early on. But what I've heard lately, guys, and I'll throw this over to you, Morgan, because you're versed in this stuff as well, is what I'm hearing is, especially I'm going to quote a conversation with the head of investment banking at one of the biggest lenders in the space. And he said, I think with Schedule 3, the research starts again, but because we've been burnt so much, people weren't doing the work in advance. So maybe the work starts in Q1 and those allocations increase later in the year. But I'm curious, Morgan, the conversations you've been having on that side.
Oh, yeah. Well, I mean, yes, for sure, research is going to expand meaningfully. I mean, just moving off of 1 to 3, the government made it basically impossible to do research, right? They just would delay programs, give them small allotments. Where they could source it was oftentimes just horrible sourced supply. So it was like, how effective was the research even to begin with? And this just broadens this so much, which is fantastic. I think for people at the end of the day, I mean, there's just such an overwhelming amount of anecdotal experience that we've all know and share from people in our worlds. There's something here, but obviously now having more dedicated capability with universities and things to do this is just incredible. But what a lot of the conversation we've been having with folks about how to go about this from a capital, talking back on the capital side of things, is there's kind of two cohorts, right? There's the rampant speculation kind of folks that want just the trade idea, the get rich, like what's got the most torque. And then there's the more established, I'd say more sophisticated capital that says, okay, how do I enter this space in a thoughtful way? And, just kind of stepping out to other industries. What do you oftentimes start with in that context? You start with those that have survivability, that have balance sheet, that have established market share, that have teams. And it might not have the highest return, but it's a much lower risk profile. And so if you want to come in and work with those groups, capitalize and participate in the economics of that, and view them as the ones that are the horses to get behind because they can be consolidators, they can have more ability to generate profit, focusing on the lower risk is the larger capital kind of mindset. And certainly thinking about, it's not just talking about operators, this goes to service providers and technology companies, the same idea of start with who you think are the leaders in those verticals and think about how to participate with them. And so I think this does open up a lot of opportunity for consolidation. But I think the capital is initially the largest chunks of capital are going to flow to those that are the largest, most established players in their areas. And, after those get to a certain point where there's not really an attractive proposition, then it does start to spread out from there. But because we just have not had a cycle in so long, I think it's going to start there and then eventually work its way through the system as things get better, as growth becomes more visible again, as the savings start to flow through, the tax savings from 280E, as it just gets clearer and clearer, then we'll broaden out. And that's the conversations we're having. It makes sense. I can tell you, I can't imagine any one of them cares one bit about where the stocks have traded over the last week, including today, because they're trying to think about, the next couple of years, not just the next 24 hours.
Yeah, if I could just jump in here, Jesse, real quick. I think, to summarize what Morgan certainly reflects what I'm seeing, a lot of the capital is going to be solutions oriented. On the credit side, it could be refinancing.
What does that mean, Scott? Solutions oriented?
I'll just give you an example. Let's just take Trulieve, right? They had $365 million in notes that were coming due. They just refinanced. It was $140 million. It was supposed to be 100, so it was $140 million, and it was upsized. It's a 5-year senior secured first lien piece of paper with a non-call, two-year non-call. I might be getting a little bit technical, but effectively what you saw was a company that was, let's just take the tax issue aside for a second. You had a company that effectively cut its leverage profile in half, paying 10.5% cash pay. If you kind of line that up, these companies aren't rated by the S&P and by Moody's, but it's basically 1 or 2 notches below investment grade. Now, just to put that into context, a single B, 2 notches below investment grade is trading, call it 6 to 6.5% yield. So our best, and Trulieve is clearly one of the best positioned, publicly traded tier ones. Our best companies are paying rates, call it 300 to 400 basis points higher than their peers outside of the industry for way less leverage with way more onerous terms. And so I suspect, and again, just to reemphasize, this is Trulieve. This is not a $50 million market cap that has to refinance $150 or $200 million of debt. So I suspect, most of the capital, at least on the credit side, and potentially on the equity side, like what we're seeing with Vireo and Chicago Atlantic, is going to be very solutions oriented. Having capital to refinance a over-levered balance sheet, having capital to acquire some assets, Curaleaf buying cannabis Virginia license is a great example. That's where I suspect most of the new capital is going to come in. And by extension, I don't know if we're there yet, but I imagine you'll start to see more toe dipping, maybe from strategics to at least get a player on the field, kind of like what we saw in the 2019, 2021 timeframe. Again, now that the rules are a little bit clearer, still have a long way to go. We know definitively, or not definitively, but Schedule 1 was a big issue. And I think, again, going back to what I originally said, I think this will grease the process. It won't cure it, but it'll start moving capital. And those with the right capital will undoubtedly start looking again at the space.
That's great context, and thanks for everyone that's joined us midstream. We're up to about 1,700 people live, so I think there's a pretty good group that joined us halfway through the conversation. Jesse Redmond from Leaf Brands here with Hirsh Jain, Scott Grossman, and Morgan Paxhia, unpacking the rescheduling news. And I think an important component to this from the investor's perspective, guys, is the potential for uplisting. We have a bunch of problems to solve. We needed the rules, which we're getting a framework. We need growth, which we've talked a little bit about that, but we can unpack that more in the future. The growth could come from new states. The growth could come from CapEx. The growth could come from conversion of the of the hemp market. And so we want to see growth. We need a rule set, but we also, these lower exchanges are a problem for a lot of investors.
Yeah.
And when I was in Vegas, I met with a C-suite member from one of the largest MSOs, and they were of the opinion, we don't need safer banking. These conversations are already taking place, and the path to uplisting could be quicker than a lot of people expect. And Scott, looking at the way these companies are structured, many of these have done the work in advance, right?
Yeah.
Look at GTI to Rhythm. Look at TerraSend to the TSX. Look at Curaleaf to the TSX. Look at Verano with Aaron Miles, you know, he used to work for Exchange, one of the smartest capital markets guys we have, moving to the SIBO. Some of these moves were for short-term liquidity. You know, TSX has other advantages, SIBO too, in terms of some potential for MSCI inclusions. But a lot of that work, Scott, was the potential to move to something like the NASDAQ more quickly. What are you hearing on the exchange side? And do you think this is enough to start moving some of these companies up to a higher exchange?
Yeah, I wish I had some breaking news, but they're pretty quiet. And obviously, we enlist a number of people to help us kind of think through this. You know, I'm curious what Morgan and Jesse and Hirsh, what you think about this, but it's a little unclear, right? In theory, there's a path, and I would agree that safer or safe is not a requirement. That being said, I definitely think you need the pipes to be there first, right? We need custodians before we get uplisting. So short answer is I don't know. I do not think that the exchanges, you know, I think they're all watching it very, very closely. I don't necessarily know what that magic moment is going to be. And I would argue that we've hit it already. And so I just don't know. And I think that's something that obviously people are trying to figure out in real time.
And it's fair not to know, right, Scott? Because this is a qualitative process, right? There are some explicit rules in terms of share price and liquidity and some other things that places like NASDAQ need, but ultimately deciding whether to include cannabis that meets that rule set is a qualitative process. Hirsh, I see you over there nodding your head. What do you got for us on this topic?
Yeah, I mean, obviously, I'm not the capital markets expert on this call, so I'll just state a couple of things that maybe are obvious. Like the first is that these are discretionary decisions by these institutions. And that's kind of what I meant at the outset when we were talking about like, what are the immediate impacts of Schedule 3? And then how might it impact the calculus, right, of different institutions, whether they be banks or stock exchanges or insurance companies. And so as you guys alluded to earlier, right, these are discretionary decisions. In theory, some of these exchanges could have listed cannabis companies when it was Schedule 1. I think moving to Schedule 3 logically would create some incremental comfort. And although I've not been involved in any of these discussions, I know many people who have been having these discussions for several years. And so that makes me optimistic that even in a Schedule 3 world, even in the absence of safe harbor language from safe banking, that some of these companies would uplist. And again, you know, obviously that would be the biggest buoy to equity prices out there. And then the second rather obvious comment I'll make is that uplisting is perfectly compatible with the America First agenda of President Trump, right? Particularly in a world where we recognize cannabis as medicine, it becomes even more absurd that the benefits of that policy change would flow to these Canadian companies. And so I think that's another example of how, you know, now that Schedule 3 is finalized or close to being finalized, it's incumbent upon us to do the work to take that and to enact further policy change. And I think this is an example of how, you know, I would hope that many of those same actors are having those conversations with the administration and framing it in exactly those terms, that it's nonsensical that we would allow, you know, these big Canadian companies like Tilray to be the beneficiary of this major policy change. And so, although like Scott, I don't know, like I'm somewhat optimistic that even in the absence of legislation passing, that we could start to see over time these operators uplist to major exchanges.
Yeah.
Higher exchanges, Hirsh. Higher exchanges. Morgan, why did I throw it over to you? I'm curious your perspective, both on those tier ones that have set up some structures to make that NASDAQ move easier, but also, Morgan, there's guys like you and a number of investors out there that own these private companies, right? And the dream in a VC type portfolio is you get some of those home runs by companies going public. And I can't think of the last cannabis company to go public. So those exits have been much more difficult. Any hope for some of the smaller companies, Morgan, that ignites some of that potential to do some of this uplisting or go public in the first place, I guess, in those cases?
Yeah, I mean, there's certainly some pretty sizable private companies that have nice, clean businesses that, have been waiting for this too. Like they've all, the groups that we talk to that certainly fit all the criteria have been waiting for not going OTC. If they're going to IPO, they want a traditional IPO, or, get access. It doesn't have to be an IPO, but get to a higher exchange, illicit exchange as their exit. So that could be really interesting if we get some of those next year. I don't think the exchanges are going to move until this is actually effective.
Sure.
Right, because they're going to wait for that at a minimum. I wouldn't be surprised if the exchanges want to see companies have resolution to how they're going to work out of their previous UTP situation, so that they feel like they're also on sides with the government and on the same page, because it is a discretionary thing. I could see that as like they don't want that overhang. They want that clarification, or just a clear strategy, however they're going to handle it. Because, it's being discretionary, the goalposts can always move, right? And so that's the hardest thing. But if you can come in with the cleanest argument of why at this point, we should afford access to them, especially when we do have these Canadian companies listed here that have enjoyed incredible benefits from it, to the detriment of a lot of their shareholders via just printing ATMs into oblivion to shore up their balance sheets. But they've been able to do that because they've had our exchanges to do that, while our other companies, just not. So I think it makes that argument between the two harder and harder for them to justify why one versus the other. But I think this is one of the things that the industry is going to have to tackle next year and get on it right away. I know it's on their minds, and just wanted to get some clarity here. And so I'm assuming that, now that we've gotten this step done, it opens up 50 more steps to do, but I'm sure that's, in their minds, and they're going to be right away to work on that as soon as we get that effectiveness. And I think that would be great, because I think I would love to see some new issuance. There's plenty of, unfortunately, too wounded companies that are just not going to make it, that we're not going to have access to higher exchanges because they're just not going to survive. They're going to get, dissolved, split up, bankrupt, whatever might happen. Those assets that are of value within them will accrete to the larger ones that can do it. It's been a brutal cycle. It's been actually very slowed because we have not had some of these other mechanisms. But I think as we're getting more progress, as we're getting this progress, I think that'll accelerate this cycle that's just taken so long to clean up some of these broken companies into healthier companies. And that's a healthy system that just has not really been functioning, partly because the big companies have, as Scott was saying earlier, it was so hard for them to even transact because of how do they even value themselves when you're on this OTC and you're, could be moving around 20-30% in a day. It's really hard to do. So as that starts to stabilize, it's just firing the engine up, getting the bus moving again. It's going to take some effort. It's going to take some work. I love the analogy of greasing. We got to get things relubricated and moving again. But this is a starting point to be able to do that.
Yeah, I think there's a lot of price discovery going on, right? I mean, if you think about the MSOS, this is what, the third 100% return round trip of the year. So that's unlevered, right? So that's quite remarkable. At the same time, you have companies who are proactively buying stock. There's a few that come to mind. One that comes up to mind, I feel like a broken record because I've mentioned them 3 times, is a company like GTI. They've been buying stock since fiscal year 2023. They bought about $40 million worth of their stock at a $10.50 share price. In 2024, they bought about $75 million at about $11 share price. And through the first half, we're about $25 million now at a much lower price just because of where the stock was earlier this year. So, not that I give recommendation, just going back to that initial, or one of the initial questions you asked me, Jesse, is like, are people doing work? I mean, if you're not doing work with this volatility and you're a professional investor, then I would say to you, wait, what are you doing? I mean, there's just not going to be a lot of moments where you're seeing an industry just being born before our eyes, and it's a heavy retail And I get that, and that has obviously positives and negatives, but it's coming. So if you haven't done the work, and you run a consumer exposure, right? If you're owning consumer names, alcohol, all that stuff, there's just no excuse now, in my judgment, because a lot of the themes that are going on outside of cannabis are directly or tangentially related to what's going on in our industry. And so, what I would recommend is people just sharpen their pencils. You just have no idea, right? Like 2 weeks ago, we were hopeful, but 2 weeks ago, this event today wasn't necessarily bookmarked in our calendar. And so if we do get one of these events that are monumental, and you're still kind of, trying to understand who's best and worst positioned, you're at an enormous disadvantage, both strategically as well as an investor.
I've got about 10, 15 minutes here, guys. And I'm going to jump over to the Dales report and talk to them for a second. But a couple more points that I want to get to. One, Hirsh, you mentioned this America First agenda. And one thing that's missing here, too, is exports, which is a huge thing in Canada, especially. I know, Hirsh, you've been spending more time in Europe and some of these emerging markets, to which we could be exporting flower. Do you see any path there, or how do you think we get to the U.S. being an exporter of cannabis to other places?
I don't see any immediate path, right, for exporting coming out of Schedule 3. I mean, to state the obvious, we still can't engage in interstate commerce in this country, right? So like international commerce seems a far way off. But particularly in a world where we recognize cannabis as medicine and this industry as more legitimate, it comes to be, increasingly absurd that, a majority of the cannabis that's consumed in these quickly growing medical markets like Germany and like Australia are being exported from Canada. And if you just look at the resurgence in the Canadian cannabis market over the past, I'd say 18 months, a lot of that is downstream of the fact that they're able to export a lot of their excess supply into other countries, which not only benefits those companies, but also impacts pricing in those markets, right? And has buoyed prices. I mean, I'm not saying the Canadian cannabis market doesn't still have challenges, but it's a world away from where it was 18 months ago. And we're really starting to see the emergence of Canadian darlings that are making a big impact like on the global landscape. And so I guess the answer to your question, Jesse, is like, yes, technically no exports will immediately flow, right, from this change from Schedule 1 to Schedule 3. But I do think it makes more glaring, right, the fact that the U.S. is not a participant in what is a growing global industry. And there's a bit of irony here in the sense that, as I think about a lot, the U.S. really kind of shapes the global environment when it comes to drug policy. It really shapes the global agenda. So downstream of this announcement that the whole world is watching, you will start to see more and more countries, particularly in the democratic, what you might call open Western world, start to, engage or embrace cannabis. And I think that will, if the US fails to make policy changes that allows it not just to influence those countries, but to take advantage of those markets, then that failure will become increasingly glaring. And I think this administration, with its America First posture, with an attitude that the U.S. ought to dominate emerging global industries, would be perfectly positioned to continue to move us forward to take advantage of those markets. So nothing immediate, but this is the big first step that we need to take to start having that conversation internationally.
Hirsh, with one thing we were trying to read through, and when we were listening was, there was a lot of talk about CBD. Was there anything, or have you seen anything around prohibiting importation of CBD?
No, I have not. That's not something I thought about. So I guess my that's an interesting question, but yeah, nothing that I've heard there. But on that, what continues to be exciting to me about that announcement is that if you can even open the door a little bit to the U.S. government, particularly in the healthcare systems that it administers, accepting cannabinoid products, I think that precipitates, cannabis having a bigger and bigger place in our healthcare system, which is exciting. And I think the other thing that was exciting about that portion of the announcement that was at least, somewhat unexpected to me until recently we started hearing about it, was the discussion of the re-examination of hemp, right? Like one thing that has really crippled our industry, and I think Scott talks a lot about this a lot when he talks about unity, is the civil war that has happened between, the cannabis and the hemp industries. And so I think one of the questions for us in 2026 is like, can we redefine hemp in a way that mitigates the conflict between those two parts of the ecosystem? Because I think those two parts of the ecosystem are going to need to work together to achieve many of these things that we've talked about, whether it's uplisting or other policy changes. And so I think a lot of that is still uncertain, but it'll be interesting to see how that unfolds.
Yeah. And I mean, from America First, you would think they would not want to see international products. It's just because they do have more established medical kind of grade formulations and form factors. I think of like Japan and Mexico and other areas where they've been in that mindset. I just didn't know where we land on that. And I know, like I said, it's counter to America First, but because there's no kind of clarity that this is US sourced CBD that would have to be for Medicare coverage.
Totally. It's a great point for sure.
Well, why don't we wrap it up by going around the horn one more time, guys? And what I'd like to hear from you is, with this reform under our belt, today is December 18th. Yeah, the 18th. That's at the 19th. Today is December 18th. Let's go around the horn, starting with you, Scott. What are you most excited about as we head into 2026 for the cannabis industry?
There's a lot. I would just say, I'll just close with demand leads policy. I've been banging that drum for many, many years. And these types of social experiments, whether it's alcohol, whether it's organic food, whether it's cannabis, they tend not to move linearly. They tend to have this inflection, very similar to other big themes that are going on in our world, whether it's AI or digitalization, et cetera. And so my suspicion is once we unclog some of the residue that's been building up over the past 5 years, it's going to start stacking. And my suspicion is that next year, from the operator side, it'll probably be a little bit more of what we've seen, certainly in the first half. But things are going to get pretty active. I never like to say timing, but my hunch is that this is the start and of a number of initiatives that will move this agenda forward. And so I'm optimistic, as I always am.
Hirsh Jain, what are you most excited about going into next year?
I've always thought about the cannabis industry as an industry embedded inside a social movement, right? So it's an industry, but made possible by the progression of a social movement. And I think 2026 is our opportunity to put our social movement hat on, right? To use Schedule III as a tool to push for policy reform everywhere, right? Down to local cities in California, down to states that are considering legalizing, medical and adult use cannabis. And obviously, I know we're primarily concerned with the US, but also for that social movement to flow across the world. So it's not so much any one thing, but how can advocates situated all across this country and all over the world use this tool that we've been given, right? The kind of political cover that Schedule III provides to push for more rational policy and to push that social movement forward. And I think if we do that, the benefits to the industry will be downstream of that. So I'm excited to see how effective all of us, and I say all of us because it'll require the efforts of thousands of people, tens of thousands of people, right? There are no single heroes in this story. It's about all of us taking that to push for better policy kind of at a grassroots level. And I think if we do that, we're in for a very exciting, few years and decade ahead.
Co-host Morgan Paxhia, what are you most excited about heading into 26?
Poseidon had a tagline that hasn't been said in a while: harness the green wave. And I feel like, how do waves build, right? There's usually some moment and it starts small and it builds, unless it's obviously a tsunami. But even that still happens somewhere. But, at the epicenter of the earthquake. Anyway, and it builds with time, right? The wave gets bigger and stronger, whatever force that's driving it. And what I think about heading into 26 is how liquidity is going to build. That wave is going to get bigger and stronger as we get more clarity, as growth resumes, as things just start functioning. And I'm just really excited for that for this industry, because I think that's been a major impact on the continued growth, because capital has largely been trapped. So, bringing that open and starting to recirculate just has so many derivative benefits. So, watching that wave build and seeing how that's going to transpire over next year is something I'm very excited about. I'm excited about it for our investors. I'm excited about it for the industry. I just think it's just, it starts to build on itself, and it'll be really excited to see. We've all been working on this for a very long time. So, being here for this is, just can't believe it in some aspects, but damn well ready for it. And so here we go. How about you, Jesse?
Yeah, I'm stuck between a couple, but I'd say just my most heartfelt response is I'm excited to get cannabis products in more people's hands. And I'll explain what I mean by that. So we had Aaron Edelheit on, I guess, a couple of months ago, and Aaron's a big investor in the cannabis beverage space. He was big in the hemp beverages. And we talked a lot about places like Minnesota that started out with these programs where it was 5 or 10 milligram doses in beverages. And I would talk to Aaron, and I'd wonder, is this expanding the legal cannabis market, or is this taking away from it? And I think at the end of the day, after lots of conversations, I think those lower dose hemp derived products were a leg in and a way for more people to try cannabis and have a positive experience. They didn't get blasted up 100 milligram brownie. They had 5 milligrams. They realized this stuff is not the devil. It's not something to be so concerned about, and generally had a positive experience. And that's why that market was growing so much. I see that same potential in CBD. And CBD is, of course, not intoxicating. I've sold CBD through my dispensary before, and people that are looking to get high are going to hate it. But the people out there that have the wrong stigma about cannabis and cannabis-related products in their mind might try something like this pharmaceutical grade, whatever it turns out to be, real CBD products, because there's a lot of terrible CBD products out there. But they can try real CBD products, get some benefit for the conditions that it helps. CBD isn't magic. I've seen a bunch of people get disappointed by CBD, expecting unrealistic things. But if you have certain conditions, CBD can be super helpful. Now, what happens if you put this in the hands of millions of seniors in America? I think they start feeling better. I think they get off of other drugs, which I think are more detrimental to them. But I also think there's the possibility that even though that isn't proper cannabis in an intoxicating way, does that positive experience of something safe like CBD move more people over the line to say, "Wow, that was cool. Let me try one of these low-key gummies. Maybe I'll try some of that flower. Maybe I'll try that other form factor." They tell a friend. They tell a friend. They tell a friend. Because the thing I found, guys, over and over with cannabis is it's not for everybody, but if you put it responsibly in a bunch of people's hands, you get a positive outcome. And I saw this over and over when I ran the dispensary, that once in a while people ordered the wrong brownie. And, I could tell a funny story about a guy that, ended up sitting in his bathtub all afternoon because he had a 100 milligram brownie when he thought it was 10 milligrams. Stuff like that is going to happen. But CBD products are different than that. And so I think there's, so I focus on the CBD element, but I say that because what I want is momentum broadly on the demand side. And like Scott says, demand leads policy. And with this incremental change here, I think we can change the stigma around cannabis. I think we can put CBD in people's hands. And I think we can create positive experience with cannabis and cannabinoid-based formulations. Hirsh, you connected me with the guys from Level when we were in Vegas, and I got some of their formulations. Guys, it's not just CBD. There's things like CBDA, CBC, CBG. There's a bunch of non-intoxicating things we can put together to make people feel better. Yeah. So I think I'll leave it with that. I'm a greedy financial guy at heart. I used to be a hedge fund manager. I stopped doing that in 2016 to get into cannabis, and a lot has changed in me, and especially because I have a dad who hasn't worked since he was 48 years old because he has chronic pain problems. And these are the kind of programs that can change lives. So there's a personal element to me, but also I think safely getting cannabis in people's hands is a huge opportunity for the space.
Amen.
Oh.
Well, guys, why don't we leave it here? I really appreciate you both taking the time. It was kind of fun to schedule this behind the scenes because we're like, let's put a show at Thursday and hopefully we'll get some news. And, Morgan and I were talking about, the right people to have on here. And there were a bunch of people we would have liked to have had. But sometimes when you get 6 or 8 people on something like this, it's chaos. So, we appreciate you guys being repeat guests, Hirsh and Scott on the show, and appreciate you take the time to join us today. I think this was a great conversation.
Always. Thank you, gentlemen.
And Morgan, we said we might do one more show if news happened. And if we were to peek behind the curtain, you're like, we're not doing another show. And so I'm glad we got to do another show, man. It's been a fun year of higher exchanges, and it's fun to go out on a bang like this.
What a way to cap off the year with 2 great guests and good friends and another great episode with you, Jesse. So this was, I'm glad we got to do this. It's all for good reason.
Well, let's leave it here, guys. Great way to end the year. Thank you all for listening to Higher Exchanges throughout the year. You know, we had a lot of changes to the show. We went to video. We're on YouTube. We've been growing the listenership substantially, even during a period where people weren't very excited. So looking forward to doing the show next year. Hopefully we'll have some fresh eyes and fresh ears on the space. And last, hope everyone has a fantastic holiday season. And let's sit there and have some presents, have some food, and enjoy the good news that we've had today. So let's leave it here, guys. Have a great holiday season, and we'll talk to you again soon. The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research nor recommendation. All investing involves risk, including the loss of principal.